Hey, CGS investors, it is Monday, April 10th. Hopefully, everyone had a great long weekend. Taking a look at the charts today, we're seeing a little bit of selling step in. We're seeing the NASDAQ down about 1.3, the SP 500 down about 0.6%. The Dow is down about a tenth of a percent, and the Russell 2000 is actually up 0.5%. I have probably a good point for the Russell is I think got a little oversold there the other day, and we saw the market have a pretty good drop, and now it's having a little bit of a bounce back up. But overall, we'll see how that shakes out. Generally, what we're seeing here with the Russell 2000 is the complete opposite of what the broad market is doing, especially the NASDAQ. Russell 2000 has sold down. It is forming what could be a bear flag or a basing formation. We don't know which way it's going to resolve just yet, but very bearish type of price action. When we look back at the longer term chart of the Russell 2000, we have this kind of topping phase where more or less it traded sideways for a long time, eventually broke down, and now it is kind of back down at that lower end of this range. And we could easily see this move lower. Russell 2000 is typically a leader in the market. And if this starts to break down, that could be the signal for another major leg down that could lead to a lot of panic selling and get us deep into an oversold condition that could last several months of selling off in equities. So what's different here with the Russell 2000, the NASDAQ has done the opposite. It has pushed up and is flagging in more of a bullish pattern up top here. And I think there's various reasons for that, but overall, we definitely have this divergence of small caps underperforming, the large cap tech doing a lot of heavy lifting. And it's just kind of what happens in a kind of stage 3 topping phase, which I consider this entire phase here to be a stage 3 topping phase. You usually have some type of blow off move, a big crack to the downside, and then it's trying to find some traction. If it fails to get traction, we go into a stage 4 decline. So that is kind of what we're kind of looking at going forward here. If we look where money is flowing today, it's out of stocks. We're seeing the VIX up, and money is actually flowing out of bonds in a pretty big way actually as well today, which is surprising. They were positive earlier this morning in pre-market, but they've moved down, and bonds are pulling back. Overall, bonds are at a pretty significant resistance area, so that is normal for price to sell back down. Overall, bonds continue to struggle after being out of favor since the COVID spike, which we ended up getting out at the high, at the open, the ultimate high for TLT. It has been out of favor and consolidating ever since. It had what looked to be kind of a basing formation, had another little one here that looked like it could be a bottom. Now it's got this another big one here. The question is this the bottom, or are we going to have another leg down or a double bottom? It doesn't really matter. We just let the market mature, and we'll figure out eventually which trend is in place. But right now, bonds are still out of favor. We don't really even want to touch them until they start to turn up and become a favorable play. And I think there's a lot of upside potential for bonds once we get into more so a bear market in stocks. A stage 4 decline and rates start to fall, bonds should recover and could be a pretty good opportunity, along with taking inverse trades to profit from the falling stock market. So we'll see how the market unfolds and which way we go, long bonds or inverse ETFs, as the market goes into a waterfall type sell-off. If we take a look over at a couple different markets here, looking at the US dollar, the dollar index is up this morning. Having a nice pop up, almost a 0.6%. Really at this point though, it's just an oversold bounce up into resistance. If we look at the flip side of that, dollar up, gold down. Gold is down about 1% this morning, continuing to pull back from a little bit of a squeeze that it had the last week. A little bit of a squeeze. We had this high right across here as it broke to a new multi-week high. I think we saw a lot of money pile in, a lot of orders flooding in. Typically, that's kind of a crowded play. That's just a bunch of people piling in with automated trades, and then the market's going to try to flush them out. This could very easily still continue to go higher, but when you have a clear break and a squeeze to the upside, the market typically wants to try to move back and scare you out before that happens. In some case, it becomes a big reversal, just like over here where the market popped up, and then it got sold off and headed sharply lower. So it can go either way. Right now, the trend is still up. Gold is pulling back down to this breakout level right in here. So it is at short-term support. If we look over at silver, down about 0.8% this morning, pulling back. It is in this high momentum move. Let's just look at the longer term chart here. We definitely have a very high momentum move. It has kind of broken above this big consolidation phase. It had kind of one of those squeezes where it's squeezed up very quickly, kind of breaking through that level, and now it's taking a pause. But if you look at this light blue line here, that's a 5-day moving average. I talk about this quite frequently because in a strong momentum move, the 5-day, 20-day, very powerful moving averages to follow for the overall trend. Typically, you want the 5-day above the 20-day. And if you have a high momentum move, price will pull back and pause only for a couple days till the 5-day moving average catches up. And it'll continue that series in this high momentum move. And that is right where we are again today. The only thing that catches me a little bit here is that we had this huge move in price and it broke above these highs. So that naturally is going to cause a lot of shorts to get out. They're like, if it breaks these highs, I'm getting out of my short play. It also has a trigger for a lot of people saying, if it breaks these highs over here, then I want to get long, and they'll have long orders. So this is a little bit of a kind of automated, crowded trade. Everybody kind of doing their things. It's a pivot point in the market, and now it's taking a breather, whether it's going to unwind quickly or if it is going to continue to push higher with this momentum phase. Taking a look over at energy, we've got crude oil is flat on the session. It is continuing to trade right up in this resistance zone, right up here, trying to figure out if it is going to continue to move higher or consolidate. If we take a look over at natural gas, up 7%, so having a pretty big pop today. But when you look at how much natural gas has moved, a 7% move is just, you can barely even see the green bar. That's the volatility that is in natural gas. Just looking at the price of natural gas, just to where it is now, is down almost 80%. When we look at this price action, it's probably down 7-8% the previous session. Now it's back up. It is very volatile. Natural gas is known as the widowmaker. It is fast moving. It is tough to trade if you're using ETFs for positions simply, especially if you're holding them because they lose value over time. So natural gas, it's not my thing. It is really just a gambler's type of play. Very rarely will I trade it. Doing options on it like we do in our options trading signals newsletter, Brian does put on trades that allow you to profit from time decay and volatility, things like that. So there are some great ways to play it outside of just buying an ETF or the futures contract. Overall, if we take a look at the market trends, we've had the SP 500 break out of this little kind of consolidation, this pullback, this kind of downward channel. It has popped to the upside. It has what looks to be a little tight bull flag pattern here. The market is trying to figure out if it is going to extend and start another rally to potentially new multi-month highs. Just like over here, we see a big move up, it gets some traction and then pushes higher. We had the same over here. You get a big run up. Eventually the market shifts gears, turns green. You can get a push. So that's typically how it works. Obviously, if we go and look at the long-term chart of the markets, the top here is the long-term kind of investing trend, long bullish, backing cash, potentially long bullish. You can ignore these down arrows here. They're not an official trend change. It's just sentiment shifting. But overall, underneath here is the CGS strategy. You can see during a nice bull market, we can get in and have amazing runs, avoid choppy, volatile markets, have these amazing runs. And then when you get into a tougher stage 3 topping phase, which is what I think we are in, meaning the market has kind of cracked to the downside. Now it is just kind of channeling, consolidating before potentially going off a cliff and going a lot lower. You can see here, CGS, it becomes tougher. Trades are shorter. We don't get the follow through. We get a trend change. We might get a little push up into the first target, but then it rolls over and we get a trend exit or our trailing stop gets triggered out. So we're just in one of these phases where the market is a little bit more of a struggle. to pull profits out, and it's all about preserving capital. It's not the most fun time to trade because trades just don't get that follow through and see our accounts just climb week after week. But if you can survive this and have the mindset to understand that that's what this is what it's like across the board for the markets. Unless you're a day trader, you need to be prepared to be dormant and to have more choppy or losing trades than normal during this phase. Because once we get into one of these phases, life is pretty darn exciting and easy, lower risk across the board. And to kind of touch a little bit deeper, this phase here that we're in right now, this kind of choppy stage 3 topping phase. This is when I see a higher turnover of subscribers, of traders. They just can't take it, or they just don't get how the markets move. They don't understand that this is just the way it is. If you follow strict trading rules and a strategy and are managing your risk, meaning you're not just going to hold things, you're not going to be trading all kinds of stuff. This is what you need to expect. This is just a tough time in the market. I don't care if you trade stocks or whatever. It is like this across the board. Sectors one week are rallying, the next week they're selling off big, or they might last a month and then roll over. But this is when people give up on strategies. This is when people get frustrated, and I see that. And the thing is, when everybody starts to get frustrated, not everybody, but when those who don't understand how the market moves, and if you apply strategies to them, you're going to live through these phases. The key is you're going to live through them. You're not going to take losses. This is when people give up and give up on a strategy, and then they'll flip to something that is working in this type of market condition. It'll most likely be a very short-term strategy that happens to be just on a roll. And literally when those people move out of a strategy that has been out of favor like this, typically that's right near the end when a new trend takes place, whether it's a new down leg and CGS starts profiting from falling prices, and we get back on track for some very strong big gains. And then, of course, the strategy that those people just moved over to that was working in a choppy, range-bound market, that one falls out of favor. And literally, they just moved into a new strategy that now is not working. So they just continue to leapfrog into losing strategy after losing strategy because they are the market. They're the ones who are trading off emotions. They don't get it. Just as they give up, that's when the market also gives up on that trend and changes. So it's really important to understand these phases and know that we could still be in this phase here, this choppy phase, for potentially a couple more months. And that's just the way it is. Eventually, though, we are going to see a big trend to the upside, a new bull market, or we're going to see a big collapse. We'll be able to grow our accounts by leaps and bounds, especially in a falling market. The gains are big and they're fast. And then we're back in cash. They're shorter trades just because the market moves quicker, and you have to manage risk a little bit more aggressively to keep it down in a falling market. Trading a falling market is not as simple as people think, and it requires a different way of managing those trades. So hopefully that gives you a little bit of insight as to where we are, where the markets are headed, and kind of overall how to be mentally prepared for these trends and these market conditions. Anyways, that's it for now, and we'll talk to you soon. Take care. Bye-bye.